My name is Dakota Moore. I'm with the Kentucky Horticulture Council, and we've got a special treat for you guys today. We've got some representatives from the USDA Risk Management Agency here to speak to everybody about crop insurance and the products that they help create and put out. We've got Cody Adkins, we've got Brooke Stewart, and Courtney Holmes. And I will turn it over to them, and they will give us a nice presentation.
All right. Well, thank you, Dakota, and thank you to the Kentucky Horticulture Council for having us. I'm going to share my screen real quick so everybody can see the PowerPoint that I've got. All right. Dakota, you all can see that, correct? We're good?
Yes, we can.
All right, perfect. Thank you. So again, my name's Cody Adkins. I'm the Deputy Director in the Jackson, Mississippi Regional Office. I've been with the agency for, I guess, 11 years now, since 2010. Started out as a risk management specialist, serving the state of Mississippi, and then progressively moved into Tennessee and Kentucky. And then about 4 years ago, I became the Deputy Director for our office. I've got two of our Kentucky risk management specialists on the call as well. Courtney Holmes, she's feeling a little under the weather, but she is a specialist at Services Kentucky. But we also have Austin Stewart, who goes by Brooke, on the call as well. So I'll let him introduce himself now.
All right, thanks for having us. So again, my name is Brooke Stewart. I've been with RMA for 4 years now. I am the specialist for the state of Kentucky. Prior to coming on to RMA, I was 3 years with Natural Resource Conservation Service here in the county in Mississippi. So got a lot of boots on the ground of experience. Since I've been with Kentucky, in the state of Kentucky with RMA, I've had the privilege of working all sorts of crops. I'm the hemp specialist, the tobacco specialist, whole farm. It's been a eye-opening experience, and also it's a lot of fun just being a part of crops that we know go globally around the world to feed people. So producing the food and fiber of America. So it's a lot of fun, and look forward to working with you guys in the future.
All right. So thank you, Brooke. And just going through the PowerPoint a little bit, just a couple of topics that I want to cover. Really kind of RMA, the Risk Management Agency as a whole, just a brief overview. And then I want to kind of get into the Jackson Regional Office overview, how we're structured. Then I thought it might be beneficial to kind of briefly cover the crop insurance cycle, how throughout a year it processes. Then we're going to get specific into the Kentucky Summary of Business, and then we're going to look at some plans that might suit horticulture producers or small farm producers in Kentucky. So that being the whole farm, the micro farm, which is new, that's going to be coming out, and then organic and specialty crops. So first, the Risk Management Agency, we were created in 1996. We serve America's agricultural producers through effective market-based risk management tools to help strengthen the economic stability of agricultural producers in rural communities. We basically manage the federal crop insurance program. So our main goal or desire is to manage the program to help farmers pay for detrimental losses or essentially indemnity payments for producers. We work with, through the standard reinsurance agreement, approved insurance providers. So the Risk Management Agency essentially sets the policies and procedures. The approved insurance providers, individual companies, they're the ones that actually sell and service the policies through our guidelines, so to speak. We then back the AIPs with federal dollars to offset the losses that they might need to pay out. RMA's vision is, again, to secure the future of agriculture by providing world-class risk management tools to rural America. A little bit of RMA structure. We're kind of broken into three different distinct divisions. We have insurance services, which is our office. We ensure the program is adaptive, effective, and actuarially sound at the local level. And one of our primary focuses is outreach or education. So this webinar is a great opportunity for us to get out there and at least provide a face or a contact for you all if you have any questions regarding crop insurance. If there's one thing to take away from this presentation, if you have any questions or any issues or concerns in the future, myself, Brooke Stewart, Courtney Holmes, we're the contacts for the state of Kentucky. We also have our product management division. They're located in Kansas City, and they're responsible for overseeing product development as well as maintaining existing policies. And then our third division is compliance. So they are responsible for safeguarding the integrity of the program. So kind of what compliance does is on the back end, after policies are worked or claims are paid by insurance companies, they make sure that those policies were worked correctly. And the compliance office for the state of Kentucky is located in Indianapolis. Now, a little bit about our office. We administer the federal crop insurance program for 5 states, Kentucky being one of those states. The other states, Tennessee, Mississippi, Louisiana, and Arkansas. And on a yearly basis, a couple of our main topics that we look at are crop T yields. So looking at assigning crop T yields on an individual county basis, rates, plant dates, crop program reviews, requests for actuarial change or written agreements. And I know written agreements were something that were discussed, I believe, in the first webinar, the crop insurance webinar. And what written agreements are exceptions to the policy, essentially. So as I believe Dakota mentioned in the first webinar, if a program or a policy is not listed or not found in your county that you operate in, you can request a written agreement to potentially have crop insurance in those counties. It's a great tool for producers to use if there isn't something available or if there needs to be a change to an individual policy. Our program performance assessment, that was formerly our large claims review. It's converted to a PPA review, which basically is allowing us to have a more focused approach on reviewing our programs and procedures for individual crops. We also prepare disaster reports quite a bit. Unfortunately, our region with Louisiana and Mississippi got a lot of hurricanes that come through, so we do prepare our disaster reports when those cases occur, or flooding. Flooding occurs all over the place where these rivers or tributaries are, so we try to really focus in on that and report that up to our DC office. Risk management education, this webinar is a case of that, as well as we publish crop fact sheets, state profiles, and press releases. And some of those crop fact sheets or state profile press releases I'll send to Dakota to be able to share with you all later. So structure of our office or area of responsibility, as you can see, Brooke Stewart and Courtney Holmes, those are the counties that they are responsible for and in the state of Kentucky. And if we have any producers in Tennessee, Derek Johnson is the contact for the state of Tennessee. So just wanted to show this in case there was a question in one of your counties. This is who you could contact. Now, a little bit about our office. I believe we're at 12 employees. So 12 employees service the entire region. Our director is Roderick Bell. I'm the deputy director. We do have 2 senior risk management specialists, that being Marquis Saffold and Terry Lemire. And then our risk management specialist, you can see below, John Gray services Arkansas, Kamika Gray servicing Louisiana, Brooke Stewart and Courtney Holmes in Kentucky, Deborah Shows and Janice Yeskin and Ross in Mississippi, and Derek Johnson in Tennessee, and our staff assistant, Helen Ward. So I wanted to provide everybody these contacts, because if you happen to forget who maybe to email, any one of these contacts will get you to the right person if you have a question. So briefly, I wanted to just go into the crop insurance cycle, kind of how it's structured throughout the year, the application process, coverage and billing, claims process, and then the program changes, kind of how that looks, step 1 through 11. So step 1 is your policy renewal, change options, and application stage. So this is really when the insurance cycle starts. This is also when actuarial documents or rules, regulations are published by RMA and posted for agents or producers to view. That would be your plans of insurance, the crops, types of practices, and the varying coverage levels and rates. The next step would be sales closing, cancellation, or termination dates. So crop insurance works through AIPs, or approved insurance providers, and to obtain crop insurance, you would work through a crop insurance agent. And on the last slide, I actually have a link for a crop insurance agent locator tool. But what the producer would do with the crop insurance agent is fill out the insurance application, and they must sign that by the sales closing date that's listed in the crop actuarial documents. And then this is kind of reverting to step 11, but insurance coverage is continuous. So if you had it in 2020 and didn't want it in 2021, you must cancel it by the cancellation date, which is the sales closing date. This third step, the insurance provider that the agent works through would process the application and then would issue a summary of coverage and other documents to the producer or the farmer. And then step 4 is when the insurance actually attaches. And for annual crops, that would attach when the planting begins. Perennial crops, that would attach on the calendar date specified in the crop provisions. So step 5, 6, and 7 is more about producer reporting the acreage. That's your acreage report. We do require that producers report what acres they planted into what crop by the acreage reporting date. And then once that is reported, the AIP or the approved insurance providers will process that acreage report and then provide a summary of the coverage and the amount of insurance or the guarantee that's available for those producers or on those policies. So you report your reported acres, your application, your coverage levels, all the things that you select. That's what's provided in the summary of coverage, step 6. Step 7, the premium billing. That would be when the AIP actually issues the bill for the premium or what is owed to purchase crop insurance. And that'll be issued no later than, or no earlier, excuse me, than the premium billing date in the actuarial documents. Now, one thing with crop insurance is all of our policies are subsidized by the federal government. So I'm going to get into that when I talk a little bit about whole farm. But our policies, if a producer, let's just say, has a premium of $100 to pay for the crop insurance policy, and we subsidize that policy at the 60% subsidy level, the producer would only pay $40 for that policy. The federal government would cover the other $60. So that's that will be shown in the premium billing or the bill issued by the AIP. Step 8, 9, and 10. This is through the course of the growing season. If there is a damage or a causal loss, that would be step 8. So producer must report that cause of loss or the date of damage within 72 hours of that date of damage. And then designate what was the cause of loss. Was it flooding? Was it hurricane? Was it volcano? What was the cause of loss? An inspection would occur by the loss adjuster after the claim report was filed, just to assess the damage and to determine what kind of indemnity or loss payment would be paid to the producer. And then step 10, the claim is actually paid to the producer. So if warranted, the producer would actually get a check to offset the losses that occurred due to the cause of loss. And then final step 11, before we roll into the next crop year, if any changes are made by RMA on the policy or the program for that particular crop or policy that you bought previously, AIPs or the approved insurance provider would notify the policyholders in writing of those changes and allow them 30 days to determine if they want to continue the policy or cancel the policy or change any of the coverage levels or anything like that. So that would need to be done before the contract change date. But that's kind of the crop insurance cycle as a whole. That was kind of going throughout the course of an entire year. But I did just want to kind of cover that a little bit. But now I want to go into some Kentucky quick stats with everybody. And this is pulled from our summary of business. So this is all crop insurance information for the state of Kentucky. You can see on the table on the left-hand side, going from 2011 to 2020, total policies sold, we're averaging about 15 to 16,000 a year, with our total liabilities being anywhere from 1.4 billion to 7 billion in 2013. That was kind of the top for our total liabilities. So we offer coverage or protection at the $1.5 billion range for the state of Kentucky. We are noticing a trend a little bit in the total number of policies sold in Kentucky, which could show that small producers or larger producers are purchasing more land, thus lowering that total policy number. But we want to have some more information before we look into that a little bit further. But this is just really our Kentucky quick stats. And then for 2020, this might be a little bit small, but this is our summary of business and total policies sold for just the 2020 year. And the vast majority of our policies are your typical row crop. So corn, soybean, wheat. We do early tobacco, fire cured and dark air tobacco. But we do offer programs for small farmers, and that's our whole farm revenue protection, nursery, specialty crops, organic crops. And I put NA for nursery below just because we were down into the single digits on the policies, and we just needed to protect any personally identifiable information. So that's why you see that. But we do have policies sold in Kentucky on those programs or crops. Now, I really want to touch base quickly, just a brief overview on a few policies. I know whole farm and nursery are two policies that will be discussed at future webinars. But the whole farm revenue protection is relatively new. I believe it began in 2016 or 2015, but it's a great way for producers of multiple crops to insure all of their crops under one policy. And there's a lot of information on this slide, but again, it provides a risk management safety net for all commodities on the farm under one insurance policy, up to 8.5 million in insured revenue. And it's a revenue-based program. So it's solely based off of the total expected revenue from the farm itself. It's available in all 50 states, all counties in all 50 states. The causes of losses, it's insured revenue due to an unavoidable natural cause of loss. So if you have a flood or insects or anything like that that impacts your revenue at the end of the year, this whole farm revenue protection plan could cover those losses. The insurance period is based off of producer's tax year. So that's calendar year if taxes are filed by calendar year, or fiscal year if taxes are filed by fiscal year. And we offer it in distinct different coverage levels at the 5% increments from 50 to 85%. And I know Dakota mentioned this on the first call, 3 or more commodities are required for the 80 or 85% coverage levels. This is very brief on whole farm. And I know they'll be covered in future webinars, but I just wanted to kind of touch base on a few topics with whole farm. Revenue from all commodities produced on the farm, as mentioned on the previous slide, is covered under whole farm. Hemp was recently added. It does include animals and animal products. It does not include timber, forest products, and animals for sport or show or pets. The premium subsidy, as I mentioned on the previous slide, it's available and it depends on farm diversification. So the table on the right, you can see we were talking about subsidies a little bit earlier. If a whole farm, if you had 3 or more, or if you had 3 or more commodities on your whole farm policy, and you selected a coverage level of 75%, the federal government would pay 80% of the premium bill due for that insurance policy. So the producer would only be required to pay 20% of that total premium bill. So that is something nice with whole farm. We do have high levels of subsidy available in the whole farm revenue protection plan. Now you might be asking, what commodities are available on whole farm? This is the list from, I believe, Ballard or Fulton County, Kentucky, but it pertains to all counties in Kentucky. You can see it's got a lot of crops listed. It covers everything from apples, alfalfa, to okra, to pecans, early tobacco. But the one thing about this, if your crop is not listed, we do have right in the third column about 8 or 9 other options. And those options are there for, if your crop's not listed, we can insure it as an other for the first year and then look to incorporate that crop for the following year. So you wouldn't have to insure it as others. So essentially, any crop can be listed in this whole farm revenue protection plan. And we really try to make it as geared to cover all types of commodities that are out there. Now, with whole farm in Kentucky specifically, in 2016 was the first year that we started it. We did see an increase in total number of policies purchased at 37, in 2017. We have seen a little bit of a decline in the number of whole farm policies purchased out of the state of Kentucky. And that could be due to a variety of different reasons. But one thing that we did see, or we didn't see, in 2018, the 2018 Farm Bill was released, and it was really focused on how can we gear whole farm to cover more small farmers. And we were kind of seeing this trend where whole farm took off when it was first started, and then it started kind of tapering off a little bit. So we wanted to RMA research, and they are in the development stages and looking to roll out soon what is called a microfarm policy. And this was released in a news release by RMA on October 6th of this year. And it's a new insurance option specifically geared for agricultural producers with small farms who sell locally. It was, again, generated based on research by the 2018 Farm Bill, and it does include feedback from producers who grow and sell to their local communities. A couple of the caveats that differentiate microfarm from whole farm is there's no expense or individual commodity reporting needed. So thus it's simplifying the record keeping for producers, and in the revenue from post-production costs, such as washing and packaging the commodities, they're now considered part of that allowable revenue. And what RMA found is that roughly 80% of producers who sell locally reported that they made less than $75,000 in gross sales. So this microfarm policy is geared towards producers that have $100,000 or less allowable revenue. At this time, they have not released the plans or the policy or the requirements for microfarm. They've only released the press release, and that's all I can share at this time. They do plan on sharing more information with the companies on December 9th. So more information to come on the microfarm policy, but I did just want to make you all aware of what is coming. Organic farming, you know, another thing about the 2018 Farm Bill is organic farming is shooting through the roof. We're seeing it all across the board in all states. It's one of the fastest growing segments of U.S. agriculture. We do offer organic coverage available both in certified organic acreage as well as transitional acreage. So acres being converted from your regular row crops to a certified organic with an approved organic plan. And it works the same as your regular insurance plans, the plans, coverage levels, types, price selections, the TILs that we would set here in our office. Those are all similar to the main plans that we offer, the yield protection, revenue protection. Causes of loss, all production loss or insurance amount lost due to an insured cause of loss listed in your crop provisions apply both to organic and transitional practices. So that'd be your flooding, volcano, all those issues, hurricanes, drought. Those are causes of losses that are covered in crop insurance. The only things that are not covered would be a failure to follow a good farming practice, failure to comply with USDA organic standards, or some sort of crop contamination by drift of prohibitive substances those are not deemed a covered cause of loss. And this is really small. Hopefully it shows up larger for you all, but this is our organic policies that we have in the state of Kentucky. And you can see burley tobacco. I did have to white out or black out a few rows just because of PII information, but you know, we offer organic plans on burley tobacco, canola, corn, dark air, fire cured tobacco, hemp, soybeans, wheat, pasture range land and forage. So we offer a variety of different organic practices, and you can see that we did have an increase up until 2020 and 2021. That might be a little misleading if not all of our records are showing as of yet. But this trend is very similar to what we're seeing across the board in all of our states. There is a drastic increase in producers wanting to grow and producing organic crops. Specialty crops, kind of the same with organic crops, and this is the trend from our fact sheet. This is nationwide. Our specialty crops are administered under the Whole Farm Revenue Protection Plan program. And I'm glad Brooks on the call with us today. He is our specialty crop liaison out of the state of Kentucky. So he can assist with getting started if you need help in understanding the specialty crop program or whole farm, organics, anything else as well. So I mentioned a little bit, and I'm going to wrap up here in just a second, the 2018 Farm Bill. Two things really maybe three things that I just want to touch base on. The areas of research and other initiatives that we're looking at with RMA, apples. We're trying to look at changing the insurance policy language for apples. Greenhouses. We're looking at determining the feasibility of ensuring production in a greenhouse. We know that that is something that is fairly common and is increasing. So we're looking at possibly creating a crop insurance option available for greenhouse production. And then local foods. RMA, we contracted a study to assess the feasibility of ensuring local food production. We know that is a growing trend, just like organic and specialty crops. So we're really trying to focus in on improving our policies and creating new policies for producers such as yourself to help out in any way that we can. My last slide, I just wanted to provide a few links to some helpful sources. And Dakota will have these, but our public website, they've got a good list of links that can help get producers started. The whole farm, organic, specialty crops, those links are to our fact sheets. And I mentioned the crop insurance agent locator tool. That link, it's very easy, where you can just key in your town name or your zip code, and a list of agents will populate, and you can contact through that link. And then our actuarial information browser. I talked about our office. We set our actuarial, the rates, the T yields and stuff like that, the dates, that can be found under that bottom link, the actuarial information browser. So last slide, I just want to provide contact information again. This is our phone for our office, 601-965-4771. And then myself, Brooks, and Courtney's email address in case you have any questions. And I know I'm running a little bit long, but just want to wrap up and say thank you again for having us, Dakota. And if we have time, we can do questions, or if there's one thing from this presentation, I would like to say we appreciate the opportunity to put a contact or a name to the agency, and we will help and respond as much as we can, and we really want to hear from producers in Kentucky to help strengthen our program. So with that, thank you.
Thank you, Cody. That was a great presentation and really informative for our growers. We want to thank all of y'all at the RMA for attending and helping us put together this webinar. We've got a few questions involving the microfarm program, so I don't know how much you'll be able to answer these, but the first question was, what is considered selling locally under that program?
Yeah, anything with microfarm, we're directed that all we can provide is what was in the press release, and that was pretty much everything that I had. So in terms of specifics, what constitute the definitions, local farms, when it will be operational, I'm not allowed to discuss that.
Sure. And then we've got one more, and it's one I've encountered quite often from people asking, do plants have to die completely, or is it just any sort of damage that people can then file a claim for?
Any damage. So if producers, if a flood comes through and it's a brief flood and it just causes slight damage or hail, drought, it doesn't have to die completely. If there is damage that is noticed, and an adjuster can come out and assess the crop, and they'll determine, the rate of damage or how impactful that damage is, and then an indemnity payment or a loss payment can be issued on partial damages, not complete damages. Now
go ahead, Cody. Well, I was just going to add one important part there of kind of what we see in situations like that. Producers will either try to kill the crop, destroy the crop. Please make sure that you have the adjuster come and adjust the crop before anything is done. And the adjuster will actually give you the okay whether to destroy it, or they'll give you the further instructions from that point forward.
And part of the policy, that when you purchase a policy, there is a roles or responsibility or duties in the event of a loss occurs, and it does talk about leaving potential samples for producer or for adjusters to review. So yeah, it does not need to die completely before a claim can be administered.
Okay, that's great. That was very informative. I actually wasn't aware that it needed to just be a little damage. It didn't have to die. So if there's no more questions, I think we'll finish up. It was pretty good timing. We'd like to thank Cody, Brooke, and Courtney again for taking the time out of their day to teach us about the RMA and their crop insurance policies.
And Dakota, one last with the micro farm. I'm sorry I couldn't get into any more specifics, but they are trying to release that information or more information to the companies on the December 9th meeting. So at some point after that is when more specific information will come out.
Okay, that's great. We will keep an eye on that, and we will let you guys know through our Facebook and our webpage about crop insurance, any information we get about the micro farms.
Yeah, and at the same thing with anything that we are not providing for producers in the state of Kentucky that could be a viable option or something that we could potentially look into, please let us know. I mean, because one of the best things about getting out to these meetings is hearing from producers where we're lacking in providing options for crop insurance. So we do need to hear things to actually look to incorporate those ideas or opportunities.
And people would just email you those things.
Yep.
Is there
Yep.
an online submission?
An email, and it would really just be an email, and then we would start the process of researching and looking at seeing if it is a feasible option, you know. But if we don't hear about it, we're not going to know to really research into it. So that's we'll do our best, but it's always helpful if we hear from growers in the region.
Sure. And I will link all those email addresses and all the helpful links and guides you mentioned. I'll put that on our webpage. I'll link it when we post the YouTube version of this webinar, and we'll make sure you guys can get in touch with them. And I think that's it. Thank you all for attending, and thank you guys again for presenting.
Thank you so much.
Mm-hmm.
Y'all have a good one.
You too. Bye.